Since the Healthcare Reform Act passed 2.5 years ago, emails began circulating that called a provision of the law a tax on real estate sales. Now, despite NAR releasing detailed information showing how this provision works in practice and explaining why calling it a transfer tax on real estate is inaccurate, the emails persist. And the latest version of them, which has just started circulating, now says that NAR is working to get the provision repealed, which at this time NAR most definitely is not. I'm Heather Elias, NAR's Director of Social Business Practice, and I'm here with Linda Gould, NAR's Director of Tax Policy. Linda, why don't you explain to us what the origins of this Medicare tax is and explain how it came about?
Sure, and you know, it's a tax in which there is plenty to hate. There is nothing good that we can say about it. It is intended as a mechanism that would bring some investment income into the Social Security Trust Fund and the Medicare Trust Fund. And it is tax based solely on a formula, and that formula could, underscore, could reach some, but certainly not all, real estate transactions. The overwhelming majority of sales of principal residences will never be affected. You will not pay the tax at settlement. It is not a transfer tax, and it is not related in any way to the price of the house that you sell.
In what situation would a residential sale be affected by this tax?
Great question. A residential sale would be affected only if the gain on the sale, the gain, not the price, the gain on the sale was more than $250,000 on a single return or $500,000 on a joint return. Now, as a practical matter, I want to meet the person who has $500,000 gain in the market that we have just been through. There are some, no doubt, but as a general matter, everyone will still receive the full benefit of the $250,000, $500,000 exclusion. So for the majority of residential real estate, principal residence transactions, it won't come into play. But if, for example, my gain when I sell my principal residence is $530,000, I still exclude $500,000. The $30,000 of remaining gain is a capital gain. And so it is reflected on my tax return as a capital gain. It is taxed as a capital gain, and as a capital gain, it becomes part of my adjusted gross income. The 3.8% tax relates only to individuals who have more than $200,000 of adjusted gross income or $250,000 on a joint return. And so let's say, for example, that I'm a retiree, and so my income isn't particularly large any longer, but I've been in my house for a really, really long time, and so I have that $30,000 capital gain that's going to be reflected. Well, let's say that leaving aside my sale, let's say that as a retiree, my husband and I have $120,000 of adjusted gross income.
Right.
That's still not bad.
Right.
If we add in our $30,000 of capital gain, we have $150,000 of adjusted gross income. The tax is not going to affect us because we're below the thresholds. And so statistically at this point in time, the tax should reach only 2 to 3% of the entire population.
2 to 3%. Well, that's certainly not how this is being characterized.
No, it is not
at all. Interesting. So the email that we saw floating around, the way that it characterizes this, it says, and this is from the email that we've seen circulating, the National Association of Realtors is not pleased with this new tax and hopes this information is forwarded to every voter prior to the election in November. And further, it goes on to say, the National Association of Realtors is all over this and working to get it repealed before it takes effect. And it very specifically characterizes it to say, did you know that if you sell your house after 2012, you will pay a 3.8% sales tax on it? So obviously, from the way that you've explained this, that couldn't be further from the truth.
Couldn't
It's
be.
a total mischaracterization
It is
of
a
what
total
this stands.
mischaracterization.
Well, I'm glad that we have the chance to clear it up a little bit. Now, it's really not unusual to see rumors like this floating around in the internet space. They typically start as emails and then gain momentum, kind of snowballing within the social media sites like Facebook and Twitter. So how will you know when you receive an email whether or not it's an internet rumor? One of the things that you can do is take a snippet of that email, a direct quote, and put that into a Google search box and see what comes up. If it's a rumor, typically you're going to see some search results that'll show you this isn't true. It'll say that it's false. There'll be a news outlet that's reported that this isn't correct information. There are also websites like Snopes.com that actively list internet rumors and whether or not they're valid. So you can always cross-check that. Please take the time to use NAR as a resource. You can reach out to one of our staffers, use the Ask NAR feature on Twitter, or speak to someone in Info Central, and we're happy to help bring you guys the truth so that you don't have to be subjected to internet rumors.